Hi guys, touching in for another crypto market analysis video, 15th of December. Thought I'd just do a quick video following this week's macro events as there's been some interesting price action. So as per usual structure, we'll start off with the indices, then look at DXY, and then finally move on to BTC and ETH. So it's a pretty clear picture across the indices, okay? We've got ES failing at both the diagonal and horizontal levels we were talking about in the last update, okay? So as we were coming into these levels, we were saying this could be the failure point. Otherwise, we could go into the sort of green supply area here and then form the lower high. But the picture here doesn't look too pretty, okay? So with this horrible daily wick failing into the diagonal resistance, this could very much be the lower high. And for any sort of bullish argument to come back on the table, they would have to reclaim these levels and then start pushing to the upside, okay? Now, a quick flip over to NQ, you can see pretty much the same picture, okay? So we wicked up past the diag, past the horizontal resistance level, and now we're closing firmly back underneath the local sweep as well. We can also see that the daily RSI is clinging onto the midpoint here across both of the indices, but simply because it's above the mid, it's not to say this is bullish at all, okay? We're failing at key points here, and for any sort of bullish argument to come back on the table, we need to see a clear reclaim of these levels and then start pushing up, okay? But at the moment, we have to assume resistance as we're failing at resistance. So to recap the last video, and for those that haven't seen it, we are still very much in higher time frame bearish market structure, okay? So at the moment with the failure here, we would assume for it to make new lows, okay? Now that's purely on the logic that we have to assume trend continuation until circumstances change, okay? So what do I mean by circumstances changing? Well, we have to see, bearish market structure flip into bullish market structure, start breaching past some key levels, and then we can start talking about a flip to the upside. So now looking at DXY on the 4 hour, and again, extremely simple picture, but here we are sort of just grinding down in 4 hour bearish market structure. Right, so we've got the high, low, low, high, low, 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 high, low, low, lower high, and then low, low again. So quite simply, bulls need to see some of these horizontal levels have clear reclaims and start pushing above, okay? At the moment, we are just still grinding down in bearish MS. But this is certainly a chart to keep an eye on. If risk does start failing here on the higher time frames, then we should start looking for these levels to be reclaimed due to the inverse correlation, okay? Personally, based on structure, this level here, which is sort of the 105.6s, is an incredibly key level for me, okay? So what we want to see for any momentum to the upside to be in play is we sort of start reclaiming these levels, reclaim this, and then we start pushing above here, okay? If we can hold above the 105.6, that's a clean break in bearish market structure, okay? And a push to the upside is much more likely from there. Now, I'll just do ETH and BTC side by side here. Okay, we're looking at the 2 hour across both because it really was the cleanest picture on this time frame. Okay, we can see the RSI with a very clean overextended div here. Okay, so with the candle bodies taking it there. All right, so that's the BTC picture. Now if we flick over to ETH, we can see pretty much exactly the same thing, right? We've got the lower high here on the RSI. And then if we take it candle body to candle body here, we've got the dip there as well, right? Now that's for the RSI. We can also see the 2 hour AO slightly diverging as well. But really, if we flick down to the 1 hour across both, we can see that loss in momentum very clearly here, okay? So as price starts going for the range highs, we have the AO completely dropping off in momentum. And that's the picture on ETH, but you can see the same thing on BTC, okay? So there it is. You've got the lower high, clear drop off in momentum on the AO, failed breakout here, and as we can see, the push to the downside. Now, as it stands, this really isn't a good look for BTC and ETH or the crypto market as a whole, okay? So we have this basic range that was formed, okay? We swept the lows, we've now swept the highs, and what we'd expect from here is then continuation to the downside, okay? So we have a sweep, and then continuation of the momentum, right? So we've got the impulse into the range, is coming from the upside to the downside. The range is formed, sweep the lows, sweep the highs, and then we move again for a new low. Now, that being said, all right, we know that the bearish argument is very clear, very present, very visible. On the bullish side of things, we are sort of moving into these last stand demand zones on the hourly, okay? We can see that now on BTC here, and then again on Ether as well, right? We've just moved into that zone here. And we're also hovering above this trend line on ETH, okay? So if there is any push to the upside, we've got a lot of confluence here. We've got hourly demand, we've got the VPOC here in green, we've got this trend line here as well. So yeah, bulls really want to see a push here. If we start breaking down from here, okay, and we come under, we breach this demand zone and we start pushing back down under here, this is the sort of key point where the breakdown would be confirmed, okay? Because we've lost this trend line, we've lost demand. If we're going to see any sort of push to the upside, it's really at this level here. So just hopping over to Aggr quickly, and we do have a mixed bag, right? So as we sort of diverged into the highs and swept the range highs here, we really didn't have very much positive delta, okay? So what we would have wanted to see is huge blue bars of positive delta as people market bought into limit asks that were suppressing price action the other side of the range. We didn't see that at all. In fact, we still have, a large population of negative delta bars in this area, even after sort of sweeping the range highs. That being said, we do have spot leading the move down, okay? So it's a mixed bag here, really. You have spot leading the move to the downside, but you also have the absence of the positive delta at the highs, okay? Now, looking at BTC, we can see that that first impulse did create the positive delta bars, but again, we didn't really see too much on that second drive up, okay? Spot is again leading the move to the downside here, not as ferociously as with ETH, but still very much so. So generally speaking, nothing particularly conclusive from the Aggr side of things. And as this is very much a mixed bag, it's sort of best practice to lean into the price action a little bit more at this stage. Flicking over to the slightly higher time frame on BTC here on the 12-hour, we can see just how ugly the picture is from a pure PA perspective, okay? And although we didn't produce a huge amount of negative delta at the highs, spot is still driving this down and the picture across risk is generally bearish. Put simply, bulls have a lot of work to do across both the indices, failing at their lower highs and with BTC and ETH sweeping their range highs. Now, that's not to say it's impossible, just improbable looking at the picture at hand, okay? And as you know, we can and should only be playing the cards in front of us. So in the spirit of keeping this short and sweet, let's leave it there. I'll be logging off for the holiday period, but we'll check in the start of the new year. And yeah, hope you all have a great Christmas, guys, and catch you soon.